how much is China the real wild card here? Whether you look at the risk of exporter deflation, whether you take a look at, the impact on external demand, right? I think it's interesting that you talk about a fading relevance for Chinese assets. Is that almost, I guess, the best case scenario if you're an emerging market investor, for example?
If I take a look at China, I think we're probably close to the peak pessimism as it regards that market. We look at our industrial companies, which are big exporters into the Chinese market, or they've used it as their factory, and they've seen the weakness. But I feel like they're seeing signs that things are bottoming. And once you've gone through that bottom, things tend to go up. The second thing that is playing out is China is becoming much more independent within itself, and therefore its reliance on the rest of the world is actually declining at the same time as we're shifting our investment out of China and actually putting incremental investment dollars into the United States and into Mexico. And that's part of, the post-COVID reshoring initiative as we're looking to really reinforce supply chains.
Is there a redirection into, you mentioned Mexico, of course. Here in Asia, there's been a popular kind of redirection of flows into the Japanese market, into India as well. Where would you be, I guess, putting the money that may otherwise go into China if they were still in a better position economically?
I think Japan just offers such an opportunity. And look, you've seen some sectors within Japan, just looking at the large cap banks. You take a look at the trading companies, and obviously there's been significant positive moves. I think that it's always difficult to say it's different this time, but for once in our lives, based on all the research that we've done, we think it is different this time. Everyone is very focused on what came out of the topics in terms of a 1x book value ratio or price to book value ratio and the letters being sent to companies. But what I think they're really ignoring is the fact that a company that trades at 1x book value, the market is really telling you they're only expecting that company to earn the cost of capital. And we actually think there's much more earnings runway at these companies as they focus on efficiency, they use technology such as AI, and they bring those tools into Japan. And I think that there's much more of a willingness for Japan to do that. So we actually think that there's much more earnings headway than the market is giving these companies credit for.
Katrina, do you think there's a bifurcation between small caps and large caps? Because there certainly was and is in the United States, and we were just hearing earlier about emerging market small caps really outperforming. Do you look at stocks that way at all, or is it purely sort of value versus growth?
I want to say in the US, we've been very much paying attention to that trend because the mega caps in particular have really outperformed. And I think some of the gaps in valuation as we look at our small cap, and we have a small cap, we have a small cap focus as well. And there are just so many opportunities where people have just said, it's easy to be in tech and it's easy to be in the big AI plays, but there's so many other derivatives plays. And that's where we're really bullish on some of these small cap names.